Bring in one more important market voice, Ajay Srivastava, Managing Director at Dimensions Corporate Finance Services. He's here with us. Ajay, very good morning to you. How have you been digesting, the various moving parts of this market, and the fact that we've rescaled 11,000? The gloom is slightly less gloomier. We've got some positive cues coming out from the rest of the globe as well. All hopes hinging on in what comes out with the trade talks. What would you do now? Would you start looking at picking up, the names that at one point we felt were a little more expensive?
Well, first thing is that I think one of the important developments one must keep in mind is that the liquidity surplus continues in the global market, and if you saw the results of so-called unicorns like Paytm, which made 179 crores incremental sales and with 2,000 crore loss and still gets funded, so there is a lot of hope for equity investors. If I'm not saying that the company may not get still valued at 60,000 odd crore, but the fact is that shows the level of liquidity in the system. And if you were a listed company, you would hate to be listed today, because the kind of stuff the unlisted companies are getting with no profit objective, nothing at all, is absolutely mouth-watering. So one is, of course, generically speaking, the big money is today flowing towards private equities and see what's happening in that space compared to the listed space. So we are constrained. Number two is we must keep in perspective that we are getting into the festival season. Everybody is buoyant that this is going to turn around the fortunes of this one. So to that extent, selling is going to be muted for most stocks. So you could be in a safe zone vis-a-vis the stock prices for at least a month and a half till the trends become clear case the festive season for India going ahead. Third is globally you got to be very wary that the yields have climbed in the last 1 week. And that if the yield continues to climb in all the 10-year security, etc., 30 years for US, that could spell a spot of trouble for the Indian companies and the debt markets. So I think all in all, this is not a market to commit serious capital. You may reallocate, buy a story here, buy a story there, but broadly keep your money where it is. If you invested 30% of an investment in stock, keep it there. If you're 40, keep it there. Not a time to sell, but not a great time to commit large capital as well.
All right, not a great time to commit large capital, but if you were to start, staggered deployment, is your view also with the consensus? You start SIPs in financials, start SIPs in mid-caps, since we've seen them at a historical valuation discount to the large caps, and with the turn of events and the turn of the market, you'll see a bigger and faster recovery in these heavily beaten down names?
See, it is natural to expect that a stock which is 20 rupees can go up by 2 rupees in a day, so it becomes a 10 rupee kind of gain. So that's a natural arithmetical phenomenon which will play out whenever the economy turns around. But that universe is very limited. If you look at 3,000 odd stocks in the BSE, I would not say that you could have a list of more than 200 stocks where you think this play will happen. So you will also find lots of plays will flatter to deceive. So you need to find your pick of those 200 for these kind of alpha returns. And as I said, arithmetically they will go much higher. But again, the issue is, do you build your portfolio if you're a new person in the market from the bottoms up, or you go top down? I would still say the strategy remains top down, because that is where the traction is, that is where global liquidity comes, and thankfully global selling has stopped, at least in Indian stocks, so you might find some buying, but the buying won't happen in the mid caps or any cap. Mid cap is a local, very domestic local play. You want to play the game, but play it with not more than 10-20 stocks in which you are absolutely kind of convinced that this is a good story playing around. And but there are enough stories to play around. That's a good part of Indian stock market. It's so wide. You got new stories coming in every day. You saw what happened to Embassy REITs. You saw what happened to India Mart now, which has gone up this thing. You saw what's happening to Metropolis, which is a chain of pharmacies, etc. So the good part for investors is you don't need to go back to the old ones. You don't need to go back to steel. You don't need to go back to other stuff. You can really go to the new age companies which are getting more and more listed. You got Naukri.com, you got India Mart, all this stuff coming in. So I think broadly you need to look at new age companies, newer companies more than the older companies in a portfolio. Even though olders have been beaten down and the alpha returns in percent could be higher, I would still say look at a company listed in the last 3 years. That could be a good place to start for the mid cap buying.
Well, Ajay, good morning. Nice jacket, by the way. Yeah, you're sounding
Good
a lot
morning.
more.
Thank you so much, sir.
You're sounding a lot more sanguine than what you have in the past, Ajay. is the sense that even if there is no big positives, just the valuation destruction at the broader end of the spectrum might lead people to not sell these stocks down further, and they might be local in flavor, but on a top-down basis, anything which is non-large cap, which looks attractive to you as a theme?
See, you said a lot of sanguine. Yes, of course, I'm now more sanguine because I think my personal belief is that the selling is over. As far as India is concerned, whatever had to bleed out has bled out. Now what is being people are holding on is, let us see it out. There's no point of selling at these prices. So that's a good bottom for a market when selling kind of sentiment ebbs out and we're heading into the festive season. So lots of bullishness that, more cars will be sold, more garments will be sold. So let's all celebrate. So I think it's a good time to celebrate. So I think selling, that's why I'm more sanguine is selling is down. And as I started by saying, that if a company like a Paytm can get this kind of money, I'm quite sure that hundreds and hundreds of Indian companies doing a lot better can get money. So that gives indicatively that there is enough liquidity in the global system to come into the country, even for good quality companies where M&As can be funded, etc. So that's why more sanguine is global liquidity. Look what's happening to comparative valuation in the market. And I think selling is by and large done with by most people. They're selling with stocks. So that's the one. Number two, you said, as I repeated what I was saying that, there's several sectors. You saw the turnaround in the hospital industry. Now that's been a major turnaround story. It's becoming large capitalized. The players are doing well. The pharmacy players are doing well. The multiplex players are doing well. In aviation stocks are pretty well at this point of time, doing pretty okay. But if you run across a thread, what is the common thread? The common thread is each one is a market leader in its industry. And if you look at the number 2, number 3 player, they are struggling. So, let's take Apollo is flying, is recovered, is gone ahead. We have a holding, so to that extent I've disclosed to you that I have a holding there. But if you look at Fortis, it's struggling. Look at all other hospital chains, they're struggling. So, the same goes for multiplex. Look at the valuation of PVR versus Inox. The same goes for Indigo versus SpiceJet and others. So, so the common thread is that irrespective of which way you go, whether you look at chemicals, whether you look at pharmaceuticals, whether you look at APIs, generics, wherever you are, the market leader is now commanding a premium for a reason. And although it might be tempting to look at the valuation of the number 2, number 3 player, I think it'll be a very dangerous ploy because whenever the market turns, you'll find more capital moving toward the market leader and not normalizing the yields at this point of time. This is the age of scale. Scale is winning globally, including in the private equity space, and therefore you need to be with the scale. Being with the smaller looks nice at this point of time. The David and Goliath story looks very nice on the fables, but that's not playing out in the stock market.
Yeah, it isn't. What is looking like a common consensus theme, Ajay, and I just want your views out here, is that everybody that I talk to seems to be believing that Baki kuch ho na ho, financials, and India will not move ahead without financiers, financing, whatever themes come out. And in the listed space, probably the best way to play any of the upcoming themes is through financiers, because a lot of unlisted ones are now moving up. My question to you is, do you believe because of the cleanup, etc., that is happening, that it is the large cap financials, the likes of HDFC, Axis, ICICI, etc., which will do well, or is there some hope for alpha in a federal, in a DCB, in an RBL?
No, I think there is a hope for alpha, and I think the reason is simple, that the consolidation plays which will come out will need that the bigger players will need to buy out these, or private equity players will come in and participate in this, or if the deal like what's happening to Yes Bank, if that deal comes through, that's a wonderful deal because it's better to put money in Yes Bank than to put money in Paytm, for instance, given what we just discussed, the losses. So I think yes, there is a critical, I think, development going to take place in this country of consolidation in the financial space. But having said that, you cannot build, that's why I said you cannot build a portfolio like a banking. You can't build a portfolio without HDFC Bank, even though valuation is high, even though prospects are not so great in the immediate term, and the fact that the Midas might retire at the end of next 1 year or so. So, having said that, you can't help but build a portfolio around top 3 banks, for instance, because they are the market leaders whenever it happens. But in terms of alpha returns, I'm quite sure that some of the stuff which is having down the line, including some of the MFIs which have come over, and we are holding in few of them to be fair, that's why we are saying we are confident. that there will be a consolidation play. These will be bought by the bigger players. It's already happened with Gru versus Bandhan. Now it might happen to the Jeevan, might happen to the others at this point of time. So you could see a very good development in terms of getting encashment of the acquisition play more than just the buying and continuing to hold kind of stuff. If the company doesn't get acquired in 18 to 24 months, I think you need to get out of the company, because that's not where you want to be in the medium cap space, in the financial space. Finance is not the medium cap game anymore. It's just the opportunity cost of acquisition that you get. If you want to long-term play, that's not the place to be.
What about some of these themes which have become crowd favorites over the last few months, and that's been specialty chemicals, and now that we've seen that we've gone into surplus with regards to the rain, any farm-oriented themes that you feel will work well? What's your take on all of this?
You know what? I have become very old hoping that India's agriculture economy will translate to some agriculture stock. Believe me, everything counts for it, but never happens. Rallies never happen, agrochem never happens. I have no idea why it doesn't happen, but somehow or the other, it just doesn't play out. Maybe I'm jinxed, maybe the market is jinxed, maybe the stocks are jinxed. I don't know which one of the three is true. Maybe all are jinxed. But I don't believe the story plays out, because there is so much of government interference in the pricing, in the policies. You've seen what's happened to the seed industry. It was booming, it's almost died. Look at the market cap, maybe one or two companies exist, rest all have died in terms of market price. So, in agriculture, unfortunately, you're in a zone of too much interference of government policy and its impact. And some of the policies do have consequences. You see, technically, India should have the most flourishing fertilizer industry. We don't, at the end of the day. Most flourishing agrochemical, we don't. And I think that goes with the saying that on one side, you want to keep the subsidy going, one side you want to keep the price of the product cut down, you're not globally competitive, then who will afford these chemicals, agrochemicals, etc., etc. So I'm not sure I like to play the agriculture theme, because I never made money. You saw what happened to Jain irrigation, etc. They all died by the wayside, or literally death, I think, is imminent. So so you got to be careful in agro theme. Looks very nice from outside, ticks all the boxes, never delivers. It's kind of funny. But having said that, another theme which I think most investors should be there, or if not there, is people have been talking about it now. Of late has been insurance, that India will be one of the biggest countries for insurance, and therefore the top three names. Again, you see the same thread. The top name in insurance is way above everybody else. So the same theme runs. And I think in financial space, insurance should do well. But again, it's going to be just top 2 or 3 names. It's not going to be the plethora of others. I don't think that's going to happen. So, but coming back to agriculture, I don't think it's a great theme to play, because that just doesn't give you returns.
Well, Ajay, jinx, could that be it? Maybe not, Ajay. I think a lot of people would then qualify for that when it comes to the agri space, to be honest. But great having you as always, Ajay. Thanks so much for taking the time out and being with us. Good to see you, sounding a bit more positive.
Thank you very much for having me, Nilesh.